start connecting with potential investors as early as possible. So that way, when you actually raise, it's not kind of coming out of nowhere and you've already set some kind of a background like, hey, this is what I do. This is what I'm building the business, thinking about doing some things. I'm going to keep you updated. And then a month later, you send another email. And then 2 months later, you set up the campaign. Ideally, it's more than 2 months, but maybe it's it's ideally not a cold, hey, I'm setting up a campaign. What do you think? It's you kind of set the foundation as early as possible.
Hey everybody, welcome back to Adventure Capital. Today, we're sitting down with Fares Ksebati. He's the Syrian-American founder of the performance and health app called MySwimPro, which has over 1 million members in 180 plus countries and is a business with a 7-figure revenue that operates 100% remotely. A swimmer and entrepreneur, Ksebati made the Forbes 30 Under 30 list for 2020 in consumer technology. Sit back and enjoy the episode.
So Fares, welcome to the podcast.
Thanks for having me.
Great to have you here, man. Maybe you can just introduce yourself. Who's Fares Ksebati? Did I pronounce that right? And tell us about MySwimPro.
Totally. Yeah. Thanks again for having me. I think this is really fun. So I am born and raised in Michigan, been a swimmer my entire life, started the company MySwimPro, and we are a technology and media company that makes apps to help people improve their performance and health.
Hey, when you say you've been a swimmer your whole life, what does that mean? What kind of level of swimming here?
Yeah, good question. So I started like most learning how to swim in lessons at age 4 or 5, and then swam through high school and then university. And I still compete now in masters competitions in the pool and open water. So yeah, that's a little bit of fun fact. Last year I swam.
What's your stroke? What's your stroke?
Breaststroke.
There you go.
Sort of. I like all the strokes. I want to be neutral here. I like all the strokes, individual medley, but yeah, by trade, I was a breaststroker in college.
Nice.
It's my specialty. So we launched a company in 2015, and we were looking to raise. We didn't raise initially; it was bootstrap, and we chose WeFunder. We did 2 rounds of equity crowdfunding, one in 2017, where we raised a little over 130,000 from 130 something investors. And then we raised again in 2019, close to $500,000 from a little over 200 investors. So now in total, we have a little over 300 investors in 36 different countries.
Awesome. And the main thing I wanted to ask you about was basically how you did it. So if you can cast your mind back, hopefully you can remember. Especially I guess on the first raise. You raised, I think you said 130 grand. How did you do that? Be super tangible, super specific. Like what kind of steps did you go through to get the ball rolling and then close that money?
Yeah, good question. So I think one benefit that we have is because we're a consumer-facing product, like people download the app and they use it. So we have email lists, and that email is probably the best. That was the best driver of both rounds for getting people to the campaign page. In terms of specifics, one thing that we did early on, separate from the people who actually use the app, I have what I call a mentor update email list. So every month I send an update to people who have supported the company. And these are the people probably more so, like if we have email, and then we have a subset of email. So email, the big circle would be everyone who has downloaded the app. And sure, some of these people are interested in investing. A lot of them are not actually. But then we have a smaller circle of like the hardcore users of the app. And then there's another smaller circle that is people who are following our journey I've had mentor meetings with or something like that. And this group, even though it's the smallest, has the highest impact when it comes to trying to raise money. So because I send out this email every single month, kind of an update on the company and what we're doing and where we're going, before we even raise, I sort of prepped this group of people that and I know everyone like personally at some level, whether it was in person, phone call or whatever. So because there's this like personal connection, when I prep them, for, hey, this is what we're going to do. When we launched, we were able to have a little bit more traction. We also had like
you prepped them, I'm sure, in 100% legally compliant way.
Yes, so it's a private email. So it's like, it's Fares, I'm talking to someone directly that I know, versus publicly. So yeah, so this is not like this is not a public send out. So that's what it was kind of leading into it.
So that's super powerful insight, I think, right? And I like the concentric circles there. So, and just to make that kind of even more tangible, like, I guess in 2017, on the eve of the launch of your WeFund Regulation crowdfunding campaign, do you remember, like, how big were those 3 email groups? And then, kind of what, like, how, like, what goes into those emails, I guess, like, both before the campaign and after the campaign?
Yeah, so I think in terms of the size of those circles, so maybe total emails like 100,000, but more active, But the more active people who actually like care about what I'm saying, an email is not an email. There's differences there. So the more active group was maybe around 20,000, and then the smallest circle that I mentioned, that these are the people that I more personally know, was maybe 300 or 400, something like that. And so of that 300 and 400 grouping is really where you're going to have the most immediate impact.
Do you know like what percentage of that 300 or 400 invested in either of the campaigns?
Yeah, so if you include both campaigns, maybe like a third of them. But that was like where the meat came. It came from those groups, yeah.
And are you, like, this is a dumb question, but do you have like a Google sheet where you're tracking this? Are you using like MailChimp, or like how are you actually managing that?
Yeah, that's a good question. So I have a spreadsheet. And this is for like the smallest circle, like the investor mentor group. Yeah, so I have a spreadsheet, and every month I have a different sheet for it where I basically add people as I meet them. So if I meet, if in the course of a month, I might meet a few interesting people that want to follow along with what we're doing. And I think maybe in the future, they would want to invest. So I was thinking ahead, like, okay, we're going to set up this campaign.
Yeah,
so I want to make sure everyone I talk to has any kind of interest in what we're doing. I want to make sure I add them to this spreadsheet. So for the smaller group, I do that with a spreadsheet, and it's a very simple mail merge. And then for our bigger list, we use one of the platforms that does like the mass email send.
And then when you reached out to the 300 or 400 people, and it sounds like you reached out to everyone when you launched a campaign, right?
Yeah, in retrospect, I'd probably do it even more personalized than what I did. I mean, I have them personalized in the sense of you're getting an email with your name. I did have a couple of versions of it, depending on what the relationship was. I would say that's where I could have improved. It probably could have been even more personalized. One thing I did do that I think was beneficial, and I would encourage everyone to do, I did actually, with one of our like lead investors, they're a VC fund, I had a 40-minute interview type of thing where we went through our deck, and they asked questions from the perspective of like the investor. It's very educational for people who are not as familiar with how this stuff works. And then I sent out that video it's a public video once we were live. That's and awesome. Then people could see it, and then they could learn, oh, well, this guy, the guy who was interviewing me, I guess, like, he's the director of a VC fund. He probably knows what he's talking about. These are the questions he's asking. This is how the CEO is responding. And I think it brings a lot more clarity. The other thing I will mention, the difference between the raise in 2017 and then 19, and if we do one again in the future, which we're thinking about doing, it's the relationship that the founder, the CEO, or myself in this case, has with the audience. And so in the beginning, I didn't have as strong of a relationship because, maybe some of these people I just met, or they just downloaded the app or something like that. And so it's same as our list. So I say 100,000, it's like, oh, that's such a big list. Like, well, yeah, but a lot of people, these people don't really know who I am. They kind of just downloaded the app. They want to get better at swimming, not really invest. Now that same cohort of people, 5 years later, I have a much, much stronger relationship. They like know who I actually am, and they've seen the company develop. And I am very confident that our conversion rate will be higher, and for higher dollar amounts, like just because we've been doing this longer and they know about the company, they know who I am, and they know what we're doing.
Mm-hmm. When I think you're someone that's really good at producing content, and it's very impressive, the kind of the discipline and kind of rigor that you're talking about here with kind of these email lists, and your kind of consistency of communication is very impressive. Like, I think part of the reason your second raise was successful and you raised more than the first was that you send monthly updates with metrics.
Yeah.
When you're raising a Reg D round, right, you're meeting with a ton of angel investors. So you had the one interview with the VC, which you could then scale, but how many on the first round, do you remember, like, how many meetings with angel investors did you have to raise that 130K?
I feel like I had too many, to be honest, for how much money we actually ended up raising. So, and I think this goes back to the relationship that you have. So, in some ways, when
like
I was
10,
meeting
50, 100.
So let me back up to make sure this makes sense. So before we were thinking about doing WeFunder, I was meeting with investors privately to do just some, I guess you'd say, a more traditional, like not an open public offering.
Right.
So the types of investors, so I did meet with probably over 100 investors, but those investors are not ones who would put in, $500 or something. They're more interested in investing in a much larger round. And so that's a lot of those people didn't invest in our WeFunder campaign. So I was meeting, it's like the customer product fit type of thing. I was not meeting with the people that would qualify as the best investor for such a small amount of raise. But when I did meet with the right people, I guess, those maybe 10 to 20 meetings, I guess you would say, fit into that category. And I think similarly, when we raised the second in 2019, I met with maybe not in person, but like on the video or phone call or something.
So I guess a couple of follow-up questions on that. So it sounds like you were trying to raise in a Reg D from kind of accredited investors previous to the WeFunder campaign.
Yes.
That's where you were having these meetings. So that's kind of did you then stop having those meetings when you launched the WeFunder campaign? I guess that's one question. And the second question is, one thing that I say a lot, which I've heard from some founders, and I think this is true, but I'm interested in if this was the case with you, is that my hope is that if you're talking to an angel that's used to writing 20K checks, and maybe they pass because, you're pretty early, or they're kind of looking at the stock market and they're kind of nervous about, the stock market going up and down. And so they're kind of being a little bit more conservative right now. My hope would be that if you then go back to them and say, okay, well, I know when we were doing this Reg D, okay, you passed on a 20K investment, but hey, now you can actually get in for, $5,000, even like $1,000 or $2,000, and that you can maybe turn some kind of no's or maybes into yeses. Did you see any of that?
Yeah, that's what I think happened between the two rounds. So in the first round, I was speaking with people who were more interested in bigger amounts, and they saw everything we were doing, and they're like, I just won't invest right now. And then 2 years later, some of those people did come in. So your first question, though, about did I completely stop the conversations? Not really. I just kind of shifted how they were positioned. And so, and once we were actually live, I would just send people and be like, I want you to invest here. This is what we're doing. And so a lot of those people, maybe they didn't invest then, but then I did get some of them to invest in the 2019 campaign. And I think it goes back to that relationship over time, because now I'm very confident that if we just set up the exact same campaign again, we went from 2017 to 19, we raised 3 times as much. Mm-hmm. I'm very confident we would do 3 times as much again. So we'd probably do 1 to 2 million just if I rinse and repeat the same formula with a slightly bigger audience and just more traction and everything.
For each round, how did you come to the terms? I can't remember. I think you did a safe, maybe, or
correct. Yeah, we did a safe the first 2. Yeah, so we did. It was a safe with a 5 million cap on the 2017, and we were just safe, simple agreement for future equity, trying to keep it simple. So looking at what a lot of other startups that were doing tech, similar stage and everything, a lot of them were doing safes. So I don't think I've seen it actually just looking at the campaigns, everyone does a little bit different. So I don't think there's a wrong way to do it. But for us, it was familiar enough for me, the entrepreneur, and also just seeing other companies that were similar. And then luckily, our lead investor, the VC fund, they were good with it too. And so they were willing to do the safe on those terms.
Did they help you kind of figure out, okay, it's a 5 million cap versus a 6 million or a 4 million cap?
I think they wanted a little lower, actually. I think they wanted a 3, and I made it a 5, and they went with it. So, yeah, I mean, I think they have input. Similarly, when we did the 2019 campaign 2 years later, it was a safe again, and we raised the valuation cap. And I mean, we had more traction, so it's not like we were just raising the valuation cap for no reason. So I mean,
Yeah, you did have traction because you sent me those investor updates every month, and it was like that chart was just like that was actually, I think that was the most powerful thing, and why you raised 3 times as much money the next time, because every month you're putting that metrics chart in front of people, right? And it was like the subscriber base is just growing every month. And so it's almost like a kind of a Pavlovian reaction, or like you're just kind of subliminally every month reinforcing this message that my Swim Pro is growing. And then 2 years later, it's like, hey, we're doing another round. It's like, oh, obviously I want to get in on that. I thought that was I don't know if that was deliberate, but I actually think that was like, I'm sure it was deliberate.
Yeah, that was very intentional to try and illustrate that message that, yes, not only am I consistent in communicating with you what we're up to, but we're not just sitting around, we're making stuff happen. The other thing that I guess is important to note here is the duration of these campaigns. So the first one we did, it was open for over 3 months, like almost 4 months, like the whole summer, basically, it was open, and we raised 130K. The second one we did, it was open for 3 weeks. And that's how we raised almost $500,000, 3 times as much more. So I'm pretty sure if we had it open a little bit longer, maybe we would raise a little bit more. But we were just more direct and on point with the execution of those emails and kind of setting everything up. And we ran a similar formula as what we did 2 years prior, but we were able to obviously execute a little bit better because we've done it before, and I had better anticipation of what's going to happen and what questions people would have. That's another thing too. You have to do a lot of education. You get so many of the same question over and over, and as much educational material, and you mentioned the content, as much articles and videos and stuff I've done, you still get the same questions over and over.
Mm-hmm. Any tips on how to write the campaign page?
Yeah, I used to think so. It depends on, I think, 2 things: the audience of like the people that you're going to bring to the campaign page yourself. So that's part of it. And the person who's running the campaign would know that best in terms of like what type of stuff is interesting and explain it correctly. The other half, though, is the audience that's just going to be scrolling these pages on the campaign site who maybe have never heard of the company. So for those people, you have to use general enough language so that you can hook in someone who doesn't know anything about your market, or they're interested in your market but they don't know your business. And I mean, that sounds generic, but
well, one thing on there, sometimes we have companies doing a landing page like on their own website, for example, like myswimco.com/invest, which is like on their site in their branding, and it's like an interstitial page that kind of primes their users before they then come to the WeFunder page. Did you do that, or you just send people straight to the WeFunder page?
I've seen other companies do that. We had like a banner on our website, but because we're an app and just the way it works, people don't really go to our web. Our web traffic is not like our Instagram traffic is more than our website. So we did do stuff across social. And to be honest, I go back to the email. Nothing really performed the equivalent of email. Like we posted on social media. 100%. We posted everywhere.
You should do it. You may as well do it, not least for the kind of overall brand impressions and marketing as well as the advertising. But it's going to move the needle less than an email push. That was one of the things I was going to ask. Like other tactics, like did you work with a marketing agency or spend money on ads, or like any other kind of cool tactics that you experimented with that were successful or unsuccessful?
So we didn't really do much with ads and anything. One thing I did that I think was great, looking back on it, and at the time that was the goal. So before we were even considering running a second campaign, and we could have done this with the first campaign actually, I sent out a survey to my like mentor list. That list, the first we talked about was like 300, 400 people. By the time we did the second campaign, maybe it was 800 people. So I sent out a survey asking people, if I was to do this again, would you invest? Did you invest in the first one? Would you invest again? How much would you invest? What questions would you have? So I was trying to get a really good pulse. And then the feedback from that survey allowed me to position the campaign, the timing, and the messaging. And a lot of those people did follow through. So when I asked someone, hey, if I ran a campaign, would you invest? And they're like, yes, I would invest $5,000. And then they ended up investing $5,000. So it kind of, this is all privately. This isn't like a public thing. So, through email and this survey, I'm trying to figure out what what is the intention, and if you should even run it. Because if everyone had said, no, I will not invest, then we probably wouldn't have run another campaign. Like, you got to listen to the people. Like, if all these people are saying no, we wouldn't have done it. But because there was enough encouraging information that we could learn from, I was encouraged by that, and we ended up doing it.
I think that's a brilliant idea. And I think one of the other things kind of related there is, one thing I always encourage founders to do is when people invest, then put leverage them. If you're trying to market the campaign and there's one of you, if you can somehow find a way for your 130 investors to be marketing the campaign and helping you to execute a successful campaign, that's phenomenal leverage. I always wonder what the right CTA is. Is it like, connect me to someone else that you might invest? Is it like share this LinkedIn post? Is it, or even like sometimes what the CTA is for the 20,000 email list is the CTA, kind of invest. Is a CTA invest, but if you can't invest, then we'd love it if you could share the campaign on social media. Is it just the social media share and the marketing piece? So I guess like two questions in there, but like, I guess the second one, like, what's a good CTA for folks? And then the first is, did you leverage the existing investors as they were coming in, and how?
Yeah, we did that with like, here's the boilerplate messaging, share this URL, here's some things that you can say. Some people did it. It's fun. Some people, we have like a t-shirt, and so like we had someone post it from Belgium on LinkedIn, and, and when they tagged me, it kind of reinforced to the people who are thinking about investing. And when they see it, kind of the social proof, I think that's probably the more important part of it, so much as like them getting someone else to invest. But when you see like, oh, this person I respect, and then they tagged Fares, the CEO or whatever, now I feel a little bit more comfortable investing because I see other people are investing, and maybe they don't even know who that person is, but they look professional, or like they have a LinkedIn, right? That they're a human being who is investing, and therefore I saw a real human investing, therefore I'm going to invest. I think that is some, and I think this is where it sort of hurt us because we had a little bit higher investment minimum on the second round. So, if we had a lower minimum, we probably would have had more investors, and that would have been more amplified. But we had a higher minimum, so I'm not sure. It could have gone both ways when you have a higher minimum or lower.
Yeah, I wish we had a kind of an A/B test or a counterfactual, and could know, okay, like, if you go with $1,000 minimum, you'll have 3 times fewer investors, but you'll raise 20% more money. Obviously, you're going to have less investors there. We don't know whether that actually increases the amount you raise or not. It probably depends on the campaign, but
yeah, I would say the one area we fell short when we're looking back at all this on both rounds is our perk structure. We didn't have very good perks on either. Like, I think we got better maybe on the second one, but it wasn't very good. And I think even though you're making an investment, and this isn't like a normal crowdfunding where you're just, here's some free money, having some material. Yeah, having some kind of material thing is still motivating, even if you're investing like $20,000. Like, people still like seeing a material thing come through, and we did not do that good of a job on both of those campaigns. So I think having known that, now we would probably refocus at figuring out something cool that's useful.
Yeah, very cool. I totally agree. I think perks can really move the needle, especially if you get them right. And if you get them right, it can also kind of not just about the capital raising, but it can also very powerfully reinforce the brand and the community and the marketing in a way that is, well, if you're offering a 10% discount behind a bar, if you're a bar that's like fundraising and we fund it, right? That's going to bring more people over the months and years, and you're still making like easily enough profit with a 10% discount to mean that that's economically beneficial for you, as well as obviously a nice perk for investors. So that's the key. If you can find a sweet spot where it's like actually a perk that is going to be an incentive for the investor, but also economically beneficial for you as the founder. Okay, we're coming up to time. Two last quick questions for you that we ask everyone. Firstly, one piece of advice, or you've given so many pieces of advice, but if you could pick one for a founder that is looking at running a regulation crowdfunding campaign on WeFunder, what's that one piece of advice?
Start connecting with potential investors as early as possible. So that way, when you actually raise, it's not kind of coming out of nowhere and you've already set some kind of a background like, hey, this is what I do. This is what I'm building the business, thinking about doing some things. I'm going to keep you updated. And then a month later, you send another email. And then 2 months later, you set up the campaign. Ideally, it's more than 2 months, but maybe it's it's ideally not a cold, hey, I'm setting up a campaign. What do you think? It's you kind of set the foundation as early as possible.
That's a great point, man. And be more organized than I am in kind of maintaining email lists in that Google spreadsheet or MailChimp or however you're doing it.
Yep, consistently. Yep.
And then the last question is more broadly, what is a piece of advice that you would have for a founder starting a company?
Yeah, similar to the last piece of advice, start early with building the brand around whatever it is that you're doing. I see, especially in the tech mobile app space, a lot of companies, they just, okay, we're going to work on the product, we're going to build it. Well, document the journey of building it, build the brand, because, if Apple or Google takes you off the App Store, your business is done if you don't have a brand. Mm-hmm. And so, we've been very intentional from day one about trying to build the brand. And even if you don't have anything yet, document the journey of building the thing that you're building. There's some group of people that will be interested in that. And those are the people that you want to build the brand with initially.
I love that, man. That's a really, really cool note to end on. Thanks so much for taking the time. This has been really fun. I knew it would be. And you have a podcast or a YouTube series as well. You want to give a quick plug for that?
Yeah, if you're interested in learning about not only entrepreneurship, but the building of startups and investing in startups specifically, I vlog on all that stuff on my YouTube channel. And interestingly enough, some of my most popular videos are about investing in startups and how we did our raise on WeFunder. So I'll keep making more videos like that. If you're interested, check it out.
Yeah, please do, man, because I'm sure you're starting to boost our organic traffic here. So keep up the great work. Where should people go to find that?
My YouTube channel is simply my name, Fares Ksebati. So if you just Google that, and then if you guys swim, check out my Swim Pro app. We'd love to see you there.
Always be closing, man. I love it. Thanks so much. Bye.
Thank you for having me. See you, Johnny.
Alrighty. Hope you enjoyed that episode with Johnny Price, our Director of Fundraising, and Fares Ksebati. If you liked it, go ahead and leave a 5-star review. You can also subscribe to the podcast to be notified whenever new episodes come out, and we welcome you to share it with anyone and everyone you know who might enjoy it as well. Thanks for listening, and we'll catch you guys next time. Bye.